This is the biggest financial fraud in cryptocurrency history. On November 2022, over 1 million people woke up to discover that all their money was gone, stolen by the very person who promised to keep it safe. This is Sam Bankman. He is about to be sentenced to 25 years in prison. How this man fooled millions of people in the world. This guy was born in 1992 in California. From childhood, he was already obsessed with numbers and making money, with the idea that the best way to help the world was to make as much money as possible, then give most of it away to charity. At school, he studied mathematics and excelled academically while developing his philosophy of doing good through maximum wealth generation. Then, after graduation in 2014, he landed his first ever job at this company called Jane Street Capital, one of the most profitable trading firms, where he learned the art of finding price differences between markets and exploiting them for profit in the cryptocurrency space. So in 2017, he made a research and found that Bitcoin was selling for vastly different prices around the world. In America, one Bitcoin cost $17,000. Then in South Korea, that same Bitcoin was selling for $20,000. This was a guaranteed 20% profit for him if he could move money between these two countries fast enough. He realized there was this massive price difference. Bitcoin in Korea was trading at a huge price. He has to go there. He didn't think twice but to quit his Wall Street job and brought the idea of Alameda Research, his own very company, in early November 2017, naming it after the California county where he grew up. The company's mission was to buy Bitcoin cheap in one country, sell it expensive in another, and pocket the difference. So he organized his small team who would carry out this operation, like Caroline Ellison, Gary Wang, Nishad Singh, that would carry suitcases full of cash through airports, moving millions of dollars around the world. They were making tens of thousands of dollars every single day. This was like printing money. Their goal was to find a way to make it easier for themselves and their customers. In 2019, this company was generating millions of dollars in profits, but Sam saw an even bigger opportunity to create cryptocurrency exchanges, websites where people could buy and sell digital currencies. So he decided to build an exchange that actually worked. He called his new exchange FTX, a platform that promised something amazing, that it would never crash, even during the most volatile market conditions. He wanted to build something that actually works, because other exchanges would crash. During high market trading, he was expecting FTX to never break. So late 2020 to early 2021, cryptocurrency entered a massive boom period. Bitcoin soared from $3,200 to over $60,000, attracting millions of new investors who had never owned cryptocurrency before. As trading volume increased significantly, FTX captured a large share of the market. The exchange that promised never to break was handling billions of dollars in trades every day. That is where millions of customers pulled in. Then late October, investors valued FTX at $32 billion, making a 29-year-old Sam net worth $26 billion on paper. He had become one of the richest people on earth, but wealth wasn't enough for him. He wanted fame and influence to match his fortune. So he has this idea: launch the most expensive marketing campaign in crypto history, spending $150 million on advertisements, featuring A-list celebrities. NFL legend Tom Brady and his wife became the faces of FTX. Basketball star Steph Curry appeared in commercials. Even comedian Larry David starred in a Super Bowl ad. FTX secured naming rights in the Miami Heat's arena for $135 million over 19 years. Suddenly, FTX was everywhere in American. But Sam's biggest spending wasn't on advertising. It was on politics in America, giving $70 million to Democratic candidates and $20 million to Republicans, though he tried to hide the Republican donations through dark money groups. Meanwhile, Sam and his inner circle of about 10 employees moved into a $30 million penthouse in the Bahamas, mixing business and personal life in problematic ways. So Sam had a complicated romantic relationship with his Ellison, but she is deeply uncomfortable with the risks this company was taking. Sam had created a secret backdoor between FTX and Alameda Research. Whenever customers deposit money into FTX, some of it was immediately transferred to Alameda Research without the customer's knowledge. Alameda would use this money to make massive, leveraged bets on cryptocurrency prices. When the bets won, the money was quietly returned, but when they lost, the hole got bigger. What Sam created was essentially a giant shell game. Customer money was being used as Alameda's personal piggy bank. As long as crypto prices kept going up, withdrawals stayed low, nobody would notice. But that's not sustainable forever. Then in 2022, Bitcoin crashed from $70,000 to below $16,000. Other digital currencies fell even more dramatically. For most crypto investors, this was painful, but survivable. For Alameda Research, it was catastrophic. Alameda had made massive, leveraged bets that cryptocurrency prices would continue rising. When prices collapsed instead, the losses was too much, which made the company to own their customers $13 billion due to this crash. So on November 2nd, 2022, this cryptocurrency news site, CoinDesk, published a bombshell report based on leaked Alameda Research financial documents. New questions about the relationship between FTX and trading firm Alameda Research after leaked documents show unusual financial ties between the companies. The leaked documents revealed that Alameda's claimed wealth was largely fictional billions in assets that were actually just FTT tokens created by FTX itself. This caught the attention of Changpeng Zhao, CEO of Binance, FTX's largest competitor. Binance owned about 580 million worth of FTT tokens, and after CoinDesk report, Zhao made a devastating announcement on Twitter. This was a direct attack on FTX. If Binance dumped their FTT tokens, the price would crash, exposing Alameda's worthless balance sheet and potentially destroying both companies. The cryptocurrency community on Twitter, Facebook, Telegram, and Instagram were all trending, making customers to be afraid of their money on FTX. If FTT tokens were worthless, then Alameda Research was bankrupt. And if Alameda was bankrupt, what did that mean for customer funds on FTX? FTX customers were in a rush to withdraw their money. Within several hours, withdrawal requests totaled $5 billion, but FTX circumstances were anything but normal. As withdrawals slowed and then stopped entirely, Sam tried to calm the panic with a series of tweets on all of his official social media account. Every word was a lie. FTX did not have enough money to cover customers' withdrawal because they had been investing client funds through Alameda Research and lost all the money due to Bitcoin breakdown, and they were definitely not processing withdrawals normally. Alameda Research owed FTX $8 billion in customers' funds that had been lost. Sam made this insane decision. He swallowed his pride and called the man whose tweet had triggered this crisis. Changpeng Zhao of Binance. Sam begged his biggest competitor to acquire FTX and save it from collapse. For exactly 24 hours, it seemed like FTX might be saved. But Binance, the world's largest crypto exchange. But when Binance's legal and financial teams examined FTX books, they found out that all the transaction was so shocking that even a competitor wouldn't touch it. Binance immediately canceled the deal because FTX was so corrupt and so broken that nobody, not even its biggest rival, wanted any part of it. On November 11, 2022, at 4 a.m. Eastern Time, FTX was filed for bankruptcy. In his resignation letter, Sam wrote, "I'm really sorry, again, that we ended up here. Hopefully things can find a way to recover." The court-appointed investigators soon discovered that FTX had been run more like a criminal enterprise than a financial institution. There was no proper accounting department. Billion-dollar transactions were approved through group text, messages, and emoji reactions. Trading losses, $3.7 billion. Political donations, $100 million. Real estate purchases, $300 million. Venture investments, $2 billion. Personal expenses, $2 billion. The missing customer funds had been spent on everything, from Sam's political ambitions to luxury, real estate, and failed business investments. Meanwhile, over 1 million customers couldn't access their life savings. Sam was immediately arrested at his parents' $4 million home in Palo Alto, California. After briefly fighting extradition, he was flown to New York to face federal crime on several charges. The trial began on October 2023 for 4 weeks. He claimed he was a well-intentioned entrepreneur who made mistakes but never intended to commit fraud. The jury didn't believe him. After his trial, exactly 1 year after the CoinDesk report that triggered FTX collapse, he was found guilty on all 7 counts of fraud and conspiracy and was sentenced to 25 years in federal prison at the Metropolitan Detention Center in Brooklyn. His earliest possible release date will be in 2047, when he will be 55 years old. Caroline Ellison, serving 2 years in prison. Gary Wang, no prison time, probation. Nishad Singh, no prison time, supervised release. When he get out of prison, he will comment on this video, so like and guess his comment after release.